Hi everybody, Jeff Yasteen here. Again, make sure to like and follow us on social media. Follow me on Twitter and on Facebook. So for today and for this weekend video, I want to tell you my view as we head into next week's election. And I'm going out on a limb here. And I'm going to say that I expect a powerful market rally to develop, not necessarily on election night, but to develop into year end. And we may see a few more big daily declines in the next few days for next week, but I do expect that those are actually healthy developments, keeping investors off balance, if you will, and setting the stage for a stronger rally to come. I think the ingredients are there, although the ingredients that I'm thinking of may not be the same ones that you're thinking of. So more on that in a moment. So in one of my recent videos, last week to be exact, I pointed to what I called my most important chart, a chart of the CBOE put-call ratio, which measures bullishness and bearishness of options speculators based on whether they're buying more calls or more puts. Now, at the time I did the video, it was at a dangerously bullish extreme, only rarely seen in the past 13 years. But within a few days of my publishing that video, the Dow fell more than 900 points, the NASDAQ dropped more than 500 points, and then another big drop on Friday. And that was all coming at the end of a slow motion decline that we've seen since September, really, with the S&P, Dow, and NASDAQ all falling roughly 10% or so since that time, and since we hit the all-time highs in September. So really, again, we're talking about a 10% correction to date. So if we revisit that same put-call ratio chart now, look at the dotted red arrow on the lower right, reflecting the change, the big change. A lot more bears, fewer bulls since last week's big market declines. The point is that the sentiment among option speculators has shifted very sharply, very quickly away from the bullish extremes. At one point on Friday, the call ratio had rocketed far up above that 1.0 level, which is kind of the equilibrium between puts and calls, and it moved sharply towards puts, showing that option speculators expected even sharper declines in the weeks to come. So putting it all in perspective here, I think the declines we saw last week and a few more that it would not be unsurprising to see this coming week around election day is all to clear the decks, erasing the extreme optimism and introducing just enough doubt, just enough fear to set the stage for a sustainable post-election market rally. Now, what about the pandemic? Isn't that a factor in holding back the economy and therefore the stock market as well? Well, I see some intriguing developments on that front too. For instance, Moderna, just last week, said it was preparing the global launch of its COVID vaccine. It's taken in about $1.1 billion in deposits from national governments around the world, including the United States, who want to be in line to receive that vaccine as soon as it's cleared. Likewise, Pfizer and its partner BioNTech are readying their vaccine candidate for release as those companies near their vaccine's final testing hurdles. And last week, AstraZeneca said its vaccine candidate is producing an immune response among its testing groups, and especially among older adults, which is a good sign. So I take those announcements, those developments last week as very positive signs for the market. But in order to see a strong rally from here, we're going to need a different set of ingredients for it. The market, in my opinion, needs to see a true change in leadership. Now, that doesn't mean that the usual suspects, the leaders up to this point, Amazon, Facebook, Apple, Amazon again if you want, Netflix, Google, Microsoft, doesn't mean they need to keep going down. It just means that we need to see some other big sectors, very depressed sectors up to this point, start to perk up and sort of carry their weight. Now, we've seen some intriguing hints of it lately. One clue came in the midst of Friday's sell-off. The index with the largest percentage decline at midday was the NASDAQ, down more than 2.5%, while the other indexes were down a much smaller 1% or so. So that shows that there's a lot more selling in the NASDAQ among tech stocks, and that's by default going to be among the big cap, big tech stocks that we've talked about many times here on these videos. So it's showing there's a lot of selling going on there and not nearly as much selling in the other indexes, which have more of the bank stocks and the energy stocks and the industrial stocks. Those are all good signs. And here's another clue. Since mid-May, the major airline stocks and other sort of travel-related indices have started to perform better than the stock market itself. The global travel ETF, symbol JETS, J-E-T-S, is up about 38% compared to roughly 20% for the NASDAQ and about 12 to 13% for the S&P 500. You'd think with all the COVID headlines that the airline stocks, for instance, would be in the dumpster, and yet they're showing signs of life. Likewise, banking stocks. Since the NASDAQ topped out in early September, bank stocks, as represented by the XLF banking ETF, are starting to outperform by a small margin. Now, those could be all important signs telling us that some investors are selling tech stocks and buying others that are more in the more economically sensitive sectors and trying to get an early start ahead of the crowd in anticipation of a stronger rebound in the months to come. On the other hand, I've said to look at energy stocks in past videos. Alternative energy companies are doing very well. In fact, next week, November 5th, I'm doing a whole trading room seminar about alternative energy stocks that I see as the most promising picks to buy with the election then in the history books at that point. But the oil and natural gas stocks that I've talked about in past weeks have continued to disappoint. They're up big one day and they slid lower for 3 or 4 days again. And oil prices are down about 10% or so in the past week as well. I still expect all of them to turn around. Most are trading at very extremely undervalued level, but there's nothing to say they couldn't become even more undervalued first. It just depends on how things go from here. But that said, all of this could change very quickly. Investors hate uncertainty. The election is the biggest uncertainty of them all. With that event being out of the way, regardless of who wins, may be all that's needed to send stocks higher. Investors also hate the uncertainty of the pandemic, the uncertainty of when it will end. Yet in the coming month of November, most of the major vaccine developers are due to announce their preliminary results about their very promising final phase 3 tests and their promising vaccine candidates. If any one of those vaccine candidates, or all three, can clear that hurdle, there's another bit of uncertainty removed from this whole environment. Add in the market declines of recent weeks, which have worn down the extremes of bullish optimism that we've seen through most of the summer up till really early last week. And the stage could be set for yet another stock rally at a time when most investors least expect. Something to keep in mind as we go forward here. Again, try not to get too bearish as we head into election day. Again, if you like what I'm talking about here, make sure to like the video, leave a comment below, and also follow me on Facebook and on Twitter. I'm Jeff Yasteen.